Moon, as always, stock strategist, Prosper Trading Academy. How are you approaching your example trade for Microsoft this morning? Good morning, Charles.
Good morning. Good morning. This is actually an extremely high risk trade. So this isn't one that I would take today, but I'd be looking to take tomorrow. It's the October 31st. So this weekly expiry, I'm taking a strangle. I'm taking the 560 calls, 505 puts. I believe I could get it around $4.20 tomorrow. It's going to be the actual risk of the price of the spread. The reason being is that we're looking for a spectacular move. Last time we saw Microsoft jump nearly 10% off of earnings. And again, CapEx is going to be the key word this earnings season, especially with these hyperscalers, in relation to Microsoft, Amazon, Google in particular. So, if they actually end up spending less, but they're also positioned, and I think that's the key word, well positioned in terms of their enterprise suite services, and they're fully starting to, let's say, profit from their AI investments. This is going to cause the stock to absolutely explode. I could see it absolutely banging on the door of 575 after earnings if the numbers are really, really good. Now, that also means that there could be set up for some big disappointment if CapEx expenditures is actually higher than expected. And then, of course, they're not actually seeing a residual income or, I would say a strong enough flow of cash that Wall Street would say would be okay to offset that CapEx. This is a stock that could revisit back down to 490, even come down as low as 480 in the near term. So I'm expecting actually Microsoft to make a really big move. They're putting some really good risk on today. So there's a real big possibility that Wall Street is positioning themselves for a very strong earnings report.
Yeah, they certainly are. I mean, particularly if you look at the analysts, I mean, as far as the call sheet is concerned, I mean, no one seems to be in a sort of a sell or underperform type camp right now. So, I mean, the setup looks fairly favorable. I mean, you sort of outlined a couple of scenarios there. So what makes you so optimistic about this name? I mean, is this going to be a case where, I mean, if they don't announce the sort of expectations as far as CapEx is concerned with those huge sort of eye-watering numbers that we've heard from this company last time, that they will be able to make up with it by actually proving how they're monetizing from some of that?
Yeah, and I think that's the key. It's the fact that the money is being put to work, and there's going to be some sort of expected outcome that Wall Street is going to be pleased with. Now, Wall Street understands that AI is the new digital, I guess, gold rush, so to speak. Everybody's trying to position themselves, especially these big players, as being the top. Like being the leader of this sector really puts them well positioned, not for the next decade, but several decades going forward. And Microsoft has always been one of the more aggressive players in trying to position themselves to be a strong AI presence. So, for me, I think that if CapEx is at least in line or lower than expected, and they at least show some sort of residual return on their investment, I believe that Microsoft is going to be head over heels. It's going to be one of the better performers this week in terms of earnings from the big Mag 7 names.
Okay, what are your takeaways from the price action we're seeing out here this morning, Charles, as we get sort of geared up for what is going to be a massive week as far as the micro and the macro and the geopoll?
Yeah, obviously the news coming out over the weekend that, the United States and China have once again started working towards a positive step towards an actual trade deal. Both sides, both parties seem more than willing to get a deal done. That's all Wall Street needs to put risk on. You could see it right away that we're up 1.5% in the NASDAQ. We're trading at all-time highs. It seems that the market was pretty comfortable in expecting this after President Trump initially came out with some pretty harsh comments and then retracted from that over the weekend. So, as far as I can see, the Fed seems still in line to do 2 more rate cuts, even though they have a very big limitation on data. The CPI report coming in lower than expected kind of alleviated a lot of fears that Wall Street may have had in terms of skew of data. I think that right now we're just in a really good place. It's still risk on. It may be at all-time highs, but we're still pushing. And, if we're making all-time highs, on back-to-back days. It's just, you know, the market's in a really good place right now.
Certainly is. Okay, thank you so much for that, Charles Moon. As always, stock strategist at Prosper Trading Academy. Really appreciate your time today.